Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 16th, 2017. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. U.S. stock market is in a confirmed uptrend. I'm currently long the market with the strong stocks and ETFs. I'm currently in a full position. Let's take a look at market indices. German DAX index still at the high level. This is the annual high. And NASDAQ, it just make a all-time high. So right now, NASDAQ is in a strong uptrend. SP 500 also uptrend. Gold is rebounding. Right now is near the 50-day moving average. And whether the gold can turn this downtrend into uptrend or not, it remains to be seen. And right now is at the resistance level. Silver did the same. It's rebounded to be near the 50-day moving average resistance place. This is a gold mining stock. Gold mining stock has stood above the 50-day moving average. So the gold mining stock has a potential to turn into the uptrend. Usually gold mining stock will lead the metal, the gold and silver price. So we will see. For now, looks like it's possible gold may turn into the uptrend, but we don't know for sure until the further evidence show up on the chart. The crude oil consolidating last week. Crude oil ETF also pulled back. Energy ETF and pulling back toward the 50-day moving average. Hopefully, this 50-day moving average will act as a support. So it has a potential to rebound from here, but also we need to be on guard. If it falls through the 50-day moving average, that would be a bearish sign. China, Asia continue to be in a downtrend. It just fall back from the 50-day moving average. But this last trading, this seemed to be a support. It came down to the 30-40, but by the time the market closed, it bounced back up. So we may say it will consolidating around this area. Now China, Asia, this is a China H-share, Hong Kong stock traded in US ADRs. Those are the ETF for those large cap stocks. And this FXI ETR still in a downtrend. And if you draw the trend line, it's still in the downtrend. But again, it has a potential to turn into the uptrend here. US biotech now is in this downtrend. This is a triangle. So it's just the trading range becomes smaller and small. U.S. real estate and turning to the uptrend, stood above 50-day moving average, and looks like a 50-day moving average tilt to the upside is going to cross on the 200-day moving average. So IYR, U.S. real estate, is turning from previous downtrend to the uptrend. Airline, this has a potential to turn into the downtrend. You see this is making lower highs. Copper is making another turn, going back up again. So the material sector is becoming stronger now. Social media network, this ETF also has a potential to turn into the upside. So previously it was in a downtrend. Now it stands above 50-day moving average. So it may make a turn to the upside now. Solar has been in a downtrend for a very, very long time. Right now, it stood above 50-day moving average. Whether it can make that the turning point or not, it remains to be seen. If it can go above this previous high, which is $17.79, then it has a potential to go to the upside. Utility ETF consolidating here. It was also previous downtrend. Now it's going horizontally, so it also has a potential to turn back up. The rest of it are the leverage ETF. We don't have to look at it. Let's take a look at the stocks. first of all, let's take a look at the list of stocks that's in the buy range. And those are the stocks within 5% of the breakout pivotal point. And then second list are the stocks above 5% of breakout pivotal point, which is stocks are too extended. We removed previously we have a lot of stocks on the watch list. We removed some of them. The reason is just because there are too many stocks. It's hard to watch them. So I will keep the best stocks on my watch list. So the others showing the weakness now, so I just removed them. It doesn't mean they have a sell signal. It just compare with other stocks. Those are the stocks that's weaker. Okay, let's take a look at the chart. Broadcom, and this stock is in the buy range. Breakout pivotal point is $179.52. That's the most recent breakout pivotal point. Right now it's in the buy range. So it broke out here with a gap up price. And then it pulled back a little bit, hit the 50-day moving average, bounced back up. So if you have this stock, you could use this 50-day moving average as the previous pullback, the low, $173, using this price as a stop order. So if the stock is going to go up, it should not come back below that support level, because previously here it was acting as a support. And the volume is pretty decent. So we should see the stock not go down below this pullback, this low, 173, if the stock is continue to go up. But if it go below this 173, then the stock has a high potential to break down from there. So 173 should be the stop price. Alibaba, previously it went down a few months. Since last October, it went down a few months of a correction. Right now, it came back up about 50-day moving average. So that's a very encouraging sign. Alibaba may go up from here. It's working on the right-hand side of the potential base. If you were to buy now, you can still use this 50-day moving average, which is $92 as a stop to protect your position. So if the stock goes up, fine, continue hold. But if it breaks down this 50-day moving average, and then you can get out. FCX, this is a metal. It's right now the material and the metal in a very strong sector. Freeport McMoran, FCX. This is a very strong stock. Previously it break out here, but it pulled back. Now this consolidation seems finished. A stock rebound from 50-day moving average. The Friday is a very encouraging sign. The stock tried to touch 50-day moving average, but the close on the high. So the stock has a very high potential to continue go up. Again, use the 50-day moving average as a stop. So if the stock close below 50-day moving average, you can get out. If not, just continue hold. Goldman Sachs is very good now. It's making this a flat base after it had a big run up. So this consolidation is encouraging. And it's already broke out a little bit on Friday. The high of that, the high of the Friday break out from the previous high here. So it's considered to be a breaking out from the flat base. Now, the Netflix has two buy point. One is a breakout from this downtrend. Another is a breakout from this high, $129. And right now it's within the buy range. NTRS, Northern Trust. This is also in the financial sector. This chart looks very similar to Goldman Sachs. So right now, this is a flat base. So breakout pivotal point is $91.06. PRI, Primerica. This is also in the financial sector, insurance. Has already broken out from this flat base, and the volume is good. So the previous high, it dropped pretty quick. They ran up pretty quickly with a huge volume That's a good thing. When the stock goes up with a high volume, that's an indication that institutions are buying this stock and has gone through a long period of the consolidation here. This is building a base. And Friday, it broke out from the base with a pretty decent volume. So this stock is strong and within the buy range, within 5% of the breakout pivotal point. Tencent, this is a Chinese social media stock. It owns WeChat, which is a very popular social media platform. So right now, this stock has already finished the downtrend correction and went back up. This is very similar to Alibaba. The chart looks very similar. So it's buyable now and use the 50-day moving average as the stop to protect the long position. Now, second list are the stocks that's overextended, but those are the very strong stock. Applied Materials, uptrend, and breakout pivotal point is right here, $31.17. Right now it's too high to buy, but if you have it, you can continue hold. GKOS is another stock that's also too high to buy, and breakout pivotal is $36 right here. This is a cup with a handle here. It broke out from this handle right here. So it's too high to buy, but if you have it, continue hold. HQY, Health Equity, I think they own HSA, the Health Flexible Spending Account or something. Anyhow, this stock will benefit from the new administration that's kind of a promise to challenge the Obamacare. So health equity stock will benefit from it. Looks like now it's broke out from this cup base and $45. It broke out last week with a decent volume. So it's buyable. No, sorry, it's not buyable. It's more than 5% from this breakout pivotal point. It's too late to buy right now. But sometimes it can pull back, offer another opportunity. So if it pull back within 5% of this breakout pivotal point, that's another buy opportunity. If not, then just move on to the next stock. Okay, that will be all for the stock list. What to do in this market? I will continue long this market. I may sell the weak stocks, use the money to buy the strong stocks, but only buy the strong stocks when they are within the breakout buy range, which is 5% of breakout pivotal point. Every stock I buy, I will have the stop order. And the principle of set the stop order is it cannot be more than 7% below the purchasing price. It means whatever stock I buy, and the maximum I only lose 7%, and I will get out if the stock doesn't work out. I could set less than 7%, depends on the chart. I will look at the chart, look for the support level, and use that support level as a stop order if that support level is less than 7% of my purchasing price. If it's not, then I just use 7% below the purchasing price. So that's all for this week. See you next week.